Hi, my name is Dave Lundgren, and I'm the CEO of Cashflow Properties. I'm excited to welcome you to this webinar about how to avoid the volatility of the stock market and crash-proof your retirement by investing in turnkey, high cash-flowing rental properties. Today, you're going to learn how you can create wealth like the top 1% and also have a safe, secure retirement regardless of the volatility in the stock market. Hi, who am I, and why should you listen to me? There's a lot of stats here on this page or this slide, and I don't mean to impress you, but more impress upon you the fact that I've been around for about 20 years. I actually started as an Army chaplain 20 years ago, left the military, and got into real estate investing, and have done hundreds and hundreds of deals personally. And with my partners and I, we've done thousands and thousands of deals and helped dozens and dozens of our clients invest in real estate and do it passively. So I just want you to understand that I've been around the block and done a few things. Folks, there's a problem, okay? Here in America, in one of the wealthiest countries that's ever existed, where there's more opportunity, at the age of 65 years old, most people, you can see here, either 30%, 36% are dead, 54% are dependent on others, 5% are still working, and a very small percentage, only 5%, are actually getting ahead or where they want to be financially. Most of you know that the majority of folks say that the number one stress they have in their lives is financial concern. 76% of Americans say that, according to a recent study. Okay, what do you think is the difference between the top 1% and everybody else? Do you think that they have access to information that you don't? Do you think that they're able to create income in a different way than the average person? That they're maybe not trading time for money? And what can you do to change that and become one of the 5%? That's what I want to talk to you about, and that's what I'm passionate about and have been for the last 20 years. Are you concerned about retirement? A lot of folks you talk to today are concerned about retirement, okay? And here's the reality. Life isn't just about money. And so we're going to talk about money and how to secure a safe, solid retirement. But what it's really about is time and memories and spending your time with loved ones, because that's really what's most important. Vacations, memories. Money is just a vehicle to be able to do that and buy back some of that time. But the truth is most folks aren't able to live the lifestyle they want. And why is that? Well, here's the challenge I will say is the traditional solution is that most people are putting their money in stock markets, 401ks, and mutual funds. Okay? And think about that. If you heavily invested in the market, then you're familiar with the roller coaster ride that you've got to endure. Okay? As you look at this, June of 1929, we had a huge crash that we call the Great Depression. Okay? And it took 30 years to recover from that. Okay? Then there's another crash, 1966. Took another 30 years to recover from that. And then 1999 to 2013, there was only a 14-year span there. Okay? But here's the reality. There's a roller coaster, as we've all noticed, with the bear and bull markets in the stock market. It's up, it's down, it's volatile, and that's the challenge. Is most people have their money in the stock market and are not paying attention to it, and that's why these bull and busts and the volatility in the market hurts them. Okay, here's a 15 to 10-year snapshot. 2001, 2009, we had a couple more crashes. Okay, so let me ask you this. Stats show that the average bear run is 5 years. We're 10 years in to this last bear run. Do you think there's going to be possibly another correction? What do you think is going to happen? And people say, okay, well, I lose a little bit of money in the market. I get a little bit of money. I just ride it out. And over time, I hear the stat 7%. People ought to throw out 7%. The truth is there was just a study done. The average net that somebody gets out of mutual funds or a 401k, if they just leave their money in the market over time, after fees and everything, is actually 3.7%. You think, how's that even possible? It's because the reality is when you lose half of your retirement, like 2008, 2009, when the market crashed, look at what happens. People think, okay, I have a 50% loss. That's all right. I'll just get a 50% gain and get the money back. But the truth is, look at this. If you had $100, you lost 50%. If you get a 50% gain, you only back to $75. You have to get a 100% gain just to get back to even. That's why when the stock market has volatility and crashes and drops in half, it kills people. Okay, it takes so long to recover from that. The 2000s they call actually the last decade, okay? And so a lot of people look to financial experts. Let's look at Warren Buffett, right? The Oracle of Omaha. Everybody looked at him as the stock market guru. Let's listen to what Warren Buffett had to say about the stock market and about other assets you can invest into outside of the stock market.
Dr. Warren, when you say, with your comments about bonds, that makes me think of financial assets in general, which includes stocks. And I think about the printing presses, not only in this country, but around the world. You've seen the commercial cha-chung, cha-chung, cha-chung with the central banks. And there are periods where financial assets are great, from the early 80s to 2000. And I just wonder if there's then periods where hard assets are great. And you see Paulson in gold and some of these other guys in gold or commodities. Are you just not comfortable with commodities? Are there times where you should be downplaying maybe stocks or businesses and going totally full bore into commodities, but you're just not comfortable doing that?
No, the alternative with me, Joe, I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But the alternative, in my view, I mean, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type investments. And so I've said consistently for the last few years, I would vastly prefer to own common stocks than fixed dollar investments over a 5 or 10 year period. I don't know about the next 5 hours or 5 days. And that might very well extend to rental real estate. It might extend to farms. I mean, an investment, you're looking for something where you put out money now and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are two different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it.
So there you have it. Warren Buffett, the Oracle of Omaha. People look to him as a Wall Street guru. What was he talking about that? He said, I prefer income-producing assets. So specifically, he mentioned farmland, dividend-paying stocks, and rental real estate, because there's income coming in off of that, regardless of the price of that farmland or the rental real estate. There's cash flow coming in no matter what's happening in the stock market. And we'll get into a little more details about why Warren Buffett himself is recommending real estate, rental real estate, when it's done the right way, when you can have somebody else manage that for you. And what he's ultimately talking about here is a return on your time, right? There's only so many hours in a day. If you work a 40-hour work week or you go out and bust your hump and work 60 hours, that's all, and you're trading $1 for an hour, that's all you have. And you can see here, if you have passive income that's coming in 24/7, regardless of what's happening in the market, regardless of your own time, now you can get a solid return. Now you can start to get ahead, okay? So there's active income and there's passive income, right? Active income that comes off of wages, salaries, it's taxed at the highest possible rate, and you're trading your time for that. Passive income is when your money's working for you. And real estate's obviously an example of that, as Warren Buffett talked about, okay? So again, looking at it a different way, you can sit in a cubicle, active, where most people are at 95%. The 5% are making their money in passive. The top percentage of folks are able to do that through passive income. So that's what we'd suggest to you through what we call turnkey real estate investing, okay? And when we say turnkey, radically different than active real estate, which we'll talk about. There's a difference between passive real estate and active real estate. But quickly looking at the stock market versus real estate, right? In the stock market, your investment can go up and down with the market, right? Fluctuates wildly. You can potentially lose everything. Real estate, Even if a house burns down, you got insurance on it. A house is never going to go to zero, right? Our returns can be volatile in the stock market, and typically you're getting one return for that dollar. You invest in a dollar, you wait for that stock to go up. Within real estate, you can see that there's actually 4 potential returns that we'll talk about. So you invest $1, and there's actually 4 different returns you can get for that, backed by real estate, solid, steady type of return, much different. So what do we mean by turnkey real estate or done for you? Radically different than active. What I would say active real estate is what you see on these reality shows, which I've been behind the scenes on those. Those aren't real. Okay? A lot of actors involved in that. But they're out there swinging a hammer. So we'll never suggest you go out and swing a hammer. We're not going to try and sell you a book and tape or coaching here. What we're talking about is done for you real estate. So our teams doing the real estate. We place tenants. We manage that asset for you. So just like you buy a stock and you're trusting the CEO and the board of that company to manage that company well and get you a return on that stock, same thing here. Deploy your money into an asset, into real estate that's done for you. We do everything for you. So we call it turnkey or done for you real estate that's managed for you. Could be a single family home like you see there. Could be apartments, could be self-storage. You could even be a lender, meaning you could act like the bank to us and get a passive return on your money as well. So that could be an aspect of done for you or turnkey real estate. Okay, and when I say 4 returns for every dollar you potentially invest, here's some real numbers. And we're going to go into some actual examples and show you actual properties, but let me break down for you. Here's an average house in the Midwest. You can see $150,000 price on that house. If you use leverage, which is very powerful, you walk in and imagine walking into a bank and saying, hey, Mr. or Mrs. Banker, I want $120,000 to buy a stock. What do you think they're going to say? They're going to laugh you out of there. But with real estate, when it's done right and with the way we do it, you can walk into a bank, and if you have good credit and a decent amount of money, they'll give you 80% of their money, and you only have to use 20%. So this $30,000 out-of-pocket cash is what you would be out of pocket and leverage the bank's $120,000. Okay, and you can see here the cash-on-cash return. You put a renter in there that's renting out for $1,200 a month. You get a 10% cash-on-cash return, meaning for every dollar that comes in, you're comparing that to the $30,000 out of pocket that you have, your own money. Principal pay down means there's a loan on that, but your tenants, somebody else is actually paying that principal down, which in this scenario gives you 5.8%. Tax breaks, we'll talk a little bit more about that in detail, but passive income is taxed at a radically different rate, which is how healthy people or wealthy people get ahead. Okay, so I'm not a CPA, I'm not a tax attorney, and I'm not going to give you tax advice, but the reality is the average person in America, if you look at local, state taxes and everything all in, they're paying 50% or more of their income when they're W-2 active employee for somebody else. Versus passive real estate, you can have significant tax breaks. So you can see in this scenario, 3.6%, and then appreciation, meaning the value of that home when you're doing it in the right markets, which I'll explain that we're in, over time in these linear markets, they're steady eddy, 5 to 10% year over year. They're not wild fluctuations like you see in the coast in California or Florida. We're talking linear markets that we've been in for decades that have a nice steady appreciation over time. And so if that asset only goes up 5%, right, you get the total return on the 5% of the $150,000. Well, that's a 25% return on your $30,000. And that's where you can get 15, 20, 25, 40% or more total return when you look at all 4 of those returns as compared to just getting one return in the stock market, which again averages 3.7% according to a recent study. So think about it. Your ROI, if you're like the 95%, you're only getting 3.7%, how can you possibly get ahead? Especially when you have to deal with the fluctuations and the volatility versus the 1% that are out there getting 20, 30, 40% or more. Now, I gave you just an illustration. There's no guarantee you're going to make 40% total ROI, but we will show you and walk you through actual properties and dozens and dozens and dozens of clients we've worked with that are getting significant double-digit returns consistently by using real estate as a vehicle to create safe, solid, and secure returns. You can see with the Bloomberg article that said the average net ROI is 3.7. So a lot of you are probably thinking, okay, I want to be like the 1%, but how do I take advantage and how can cash flow properties help me? Well, here's one individual. I want you to hear her story. Then we'll talk a little bit more about our company and specifically how we can help you get out of the volatility in the stock market.
I've been in real estate for about 15 years, buying and selling with my husband, real estate agent for 3 years. And I think the thing that I like so much about the Kansas City market is that you have great neighborhoods and, the houses are really good. You have low entry as far as your investment, but then you have a high cash flow, and I think a lot of that has to do with the neighborhoods and school districts in the Northland. So I've been in real.
And so there you go. There's one individual, and we have dozens and dozens of other stories we can share with you, that sees the value of done-for-you real estate. So here's my promise to you. We're talking about real estate. We're talking about, ultimately, though, our passion is you and creating a significant and secure lifestyle for you. Real estate happens to be the vehicle, but here's our promise. We're always going to do the right thing, right? Integrity and experience is what we stand behind. Are we going to make mistakes? Absolutely. But we're always going to fix those mistakes. And over time, without question, my passion is getting people out of the volatility of the stock market. There's so many people I talked to in 2008, 2009, 2010 that lost half of their retirement, and it took them forever to recover from that. So that's our passion. We don't want people to be stuck in a system that works for Wall Street but not for Main Street. So our promise is to you that we've got a system that works consistently. You look at McDonald's, a great franchise. What does system really stand for? It stands for this: save yourself time and energy. And that's ultimately what we have. You don't have to go out there and do it. It's done for you. And we have a system that's worked for decades and decades and decades, thousands of deals, tens and millions of dollars that my partners and I own personally under management. Again, a lot of history, and we've got a system that works. Because ultimately, this is what it's about. It's about freedom. It's about going out there and creating the lifestyle you want. Real estate just happens to be that vehicle, right? And people intuitively understand real estate's a moneymaker. You don't have to convince somebody. Wealthy folks make their money in real estate. They're concerned about the obstacles, the challenges that stand in their way. And having talked to thousands of people over the last 20 years, I can tell you the biggest challenges are their own time and their own experience. So I want to talk to you about using our experience and our time and your money. You deploy your money, use our time, use our experience to get you over those challenges. So what's different about our system, right? There's a lot of folks out there, a lot of systems out there that are national companies that are shotgunning dozens and dozens of different markets out there, and they've created a very shallow relationship with dozens and dozens of real estate companies and providers. That's not what we do. We're very, very deep in only 2 or 3 markets, long-term relationships, 12, 15, 20-year relationships, again, thousands and thousands of deals that my partners and I have done together, and it's that deep relationship in markets that we live in, markets that we know very, very well, versus just a shotgunning approach. Dozens and dozens of markets out there, these companies have a very shallow relationship and really haven't dove in deep and vetted out those specific markets. And that's really what we're talking about in our system, to save you the time, because time is way more important than money. And if you can get a safe, solid, secure return on your money and save yourself the time, how much further ahead could you be? Now, money is a concern. And the reality is, to own real estate and buy it and hold it long term, the way we're teaching, you do have to have some money. But a lot of folks aren't aware you can even self-direct your monies, meaning if you have an IRA or a 401k or a solo K, a lot of times folks don't realize you can actually use that money to invest in real estate. And again, I'm not a financial advisor, I'm not a CPA or tax attorney, so we can go through a consultation with you. But the reality is, a lot of folks have money that aren't even aware of. Some folks that live like in California, for example, or on the East Coast, the real estate market's been on a screen for 10 years. There's equity built into their houses that's sitting there doing nothing. And we can run the math with you and show you sometimes you can pull out that equity on a line of credit, or some folks even want to do a 1031 exchange where you can sell that property and use the equity to go out and create cash flow for yourself. And again, it's just math, and we can walk you through that. But the reality is it does take money. But again, with the power of leverage, you can literally use very little of your own money and use the bank's money. So we're talking about 20, 25% as a down payment against an asset you get the entire return on. And again, the markets that we're in, Again, we're not out there in dozens and dozens of markets with a shallow relationship. We're talking about a couple markets, linear markets that have diverse economies that are steady growth economies that are not just based on one single mover in the economy. So we'll walk you through exactly what that means and our experience. And that's ultimately what it comes down to. Decades and decades and decades of experience, thousands of deals that we've walked through with my partners and I, tens and millions of dollars in assets that we own ourselves and have invested into. That's what you're investing into. Because the reality in real estate, you can make money, but you can lose money if you don't do it the right way. So we're not going to sell you a book and tape course. We're not going to sell you a big coaching program. What we're talking about is using your money and actually deploying it and buying an asset, our time, our experience, and your money. And so you can see there's an apply now. You can click on the link. And what we're ultimately talking about is creating a consultation with us. You can click on that link, talk out to one of our concierges about your situation. In the medical world, you can't give out a prescription unless you get a diagnosis, right? So same thing here. We need to know you individually, your situation, your goals, your dreams, your fears, your concerns, the questions you may have, and we'll go through an individual consultation with you. It's completely free. You can talk to me or one of my team members. You can fill out that application and let us figure out a path and a plan to create safety and security for you. Get out of the volatility in the stock market. Get into a safe, solid, secure asset, real estate that's done for you by one of our teams. Here's a quick example, and again, we'll give you specific examples and walk you through specific properties. And all of these properties, I want you to understand, are off-market, meaning they're not on the MLS or not for public consumption. We invest tens and thousands of dollars every single month to find deals that are off-market. So in the stock market, what is illegal, insider trading, is actually how you make money in real estate, meaning we're getting the deals that are off-market because the market's incredibly competitive in real estate as well. A lot of folks are out there looking on the MLS and thinking, oh, I can't make money. Well, the truth is we're getting you deals, and all of the deals we put in front of you aren't on the MLS. They're not even in front of any investors. They're exclusive to you, and they're off-market. So legal insider trading. And you can see some of the numbers here on these properties. Here's another couple that worked with us and their thoughts on working with our team.
The team that Dave has surrounded by him has been fantastic.
They were able to provide us all kinds of options at our price point and able to find us something quickly in a market that is growing.
So again, that's
the team.
We have dozens and dozens and dozens of clients. You can read some more people here, but that's our passion. Okay, we're people, we're real estate investors ourselves, and our passion and our concern is the fact that we've talked to so many people that got hurt in the volatility of the market. And that's what we want to do, is get you out of that volatility, get you a safe, solid, secure return. So what are the benefits? Well, you can see them right there, working with us. But I'll tell you what, this is not for everybody, okay? So who is this not for? Well, if you don't have at least $20,000, $25,000 as a down payment, you have to have that to be able to buy the assets. And again, we can help you find other ways. Sometimes you can get partners. Sometimes there's money in a self-directed or 401k that you haven't thought about, or equity in your home. So we can work with you on that, but this is not a no money down program. We're not selling you coaching or go out there and be active like a wholesaler or swing a hammer. We're talking about deploying your assets. Could be a commercial property. You could be a lender with us. You could be putting in commercial deals. We could do syndications. There's a lot of things we can do with that money to deploy it passively, but you've got to want to be hands off, not somebody that's looking to be an active investor. So is it for? It is for investors that want to fast track their success, that are more concerned about their time, and they just want a safe, solid, secure return on their money. Because one of the things we do, and this is a crucial part of real estate, is property management. When Warren Buffett was talking about owning rental real estate, he specifically said, if you had a way to manage it, I would get thousands of rental properties. I'd load up on them, was his exact term. Well, it does come down to professional property management. Thousands of deals we've done, hundreds and hundreds of properties under management that we place the tenants, we do the rehabs, we do everything for you, so that property, that asset is managed by a professional. We also have ways we can show you can quickly pay off those mortgages. So a lot of folks don't understand, when you take the extra cash flow you get and apply it to the principal, you can literally pay a mortgage off 3, 4, 5, 7 years and accelerate your growth. So we'll walk you through some of that so you can create generational wealth. This isn't just about cash flow for you today. It's about generational wealth that you can pass on to your loved ones as you move on. Tax savings we talked a little bit about, but the truth is, there's all this scuttlebutt about tax returns of the wealthy. The reality is the tax code is a big book of how do you save money on taxes. I'm not a CPA, I'm not a tax attorney, but I can tell you the law is that passive income is taxed differently, and the wealthy folks, if they're paying 10, 15, 20% on their taxes and you're paying 50%, well, no wonder they're getting hit. So we're actually, as part of our consultation, we have CPAs, we have attorneys that can help you structure things to save yourself radically on taxes, because taxes are the number one expense that people have throughout their lifetime. Okay, asset protection. We're also going to give you, as part of it, protecting your assets. It's not just about what you make; it's what you keep, but it's also protecting those assets so you can pass those on for generational wealth. Now, think about this. I talk to folks that are more mature all the time, and they said, if I just would have bought one property 20, 30, 40 years ago, if I would have just bought one. And think about this. The old saying is, when the best time to plant a tree is? 20 years ago. Okay, second best time? Today. And that's ultimately what we're saying. If all you did was just buy one asset, let that perform over the next 20, 30 years, how much further ahead would you be? And again, that's ultimately what it's about, is your success, your retirement, you buying back your time, because there's a lot bigger reasons out there than just money, right? One thing I learned as a chaplain in the Army is money affects every other aspect of your life, your health, your relationships. And do you think if you had less financial stress that you might start to have a better family life, maybe better marriage, maybe better health? It's all tied in together. And those are the reasons that we're passionate about helping folks out and getting out of the volatility, getting out of the game that Wall Street has. We have solutions for Main Street, not for Wall Street. So again, click on that link. You can have a free consultation with me or one of my advisors. We can actually talk to you about your situation and how to get you out of the volatility of the stock market and get you into safe, solid, secure assets that will perform for you. And that's our promise and our commitment. So again, my name is Dave Longer, CEO of Cashflow. I appreciate your time. I look forward to working with you, and I wish you the best. God bless.